W1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Inflation and Your Retirement Plan. Mike, why is it so important for retirees to account for inflation in their planning?
Yeah, massively important, and I think any retiree over any course of history will tell you that. And when you experience inflation, when you're on a fixed income, it's tremendously difficult. But even small changes in the rate of inflation, or seemingly small ones, can really lead to massive changes. For example, if you're facing 2% inflation, that means that prices roughly double every 35 years. If you're looking at 4% inflation instead, those same prices double only in 17 years. A huge change to your budget.
And obviously, this also then influences, your overall spending habits and your withdrawal rate over time. These are things that you have to account for in your planning. You can't just assume that you're going to necessarily see the same kind of inflation that you've seen previously in retirement.
Yeah, look, I think generally speaking, over the course of the last 20 years, while there have been massive drawdowns in equities, the inflation figure has remained relatively stable. If you're worried about something that could look different from that over the course of the next 20 years, then it's important to really consider what that would mean for you.
Our guide this month is titled Inflation and Your Retirement Plan, and there are two ways you can request it. The first is by calling 800-393-4001, or you can request it online at armstrongadvisory.com. That phone number again is 800-393-4001, or request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Good morning. Happy Friday. Welcome back to the Financial Exchange. If you weren't happy about markets yesterday, you're getting a bit of a turnaround today with all three major indices in the green so far. We'll be filling you in later during the show on where markets land for the day, but breaking a bit of a trend for the last few. We had a new inflation read out this morning at 8:30 a.m., and that's where we're going to start the program today. It's Mike, Paul, and Tucker with you. And Market Watch wrote this morning, the Fed doesn't think inflation will run amok again. The PCE price gauge will help clue us in. So, Paul, did the PCE price gauge clue us in on whether or not inflation is going to run amok?
We still have no clue, Mike. Still have no idea in what direction it's going to go. In terms of the numbers that we saw today, everything came in right in line with expectations. We saw the month-over-month number rise 0.2%. That was, like I said, in line with expectations. And the annual figure for core PCE sits at 2.9%. Again, right in line with what economists had estimated. The problem with the PCE is that a lot of it is telegraphed in the earlier CPI report that gets reported earlier in the month. I believe it was the 11th this month. So there's often not a lot of surprises. A lot of it is very easy to sort of interpret what the number is going to come in at. So oftentimes we sit here at the end of the month and we prep for the core PCE, and then there's very little of insightful commentary to be made other than it is what it is.
Yeah, no offense to Mr. Bartash of Market Watch, but this PCE price index did not clue us into the direction of inflation, nor does it really ever clue us into the actual direction of inflation, or it hasn't for the last several years anyway. But we do talk about it because the Fed cares a bit more about this inflation reading than they do the CPI. They use it as their main gauge for the direction of prices and just how far away from their target we actually are. And so that's, I think, the context that we can look at this. Taking a look at all the four inflation readings that we get between CPI and PCE, we are now showing a reading of 2.7% year over year at the low, 3.1% if you strip out food and energy on CPI at the high. And what I think is safe to say here is compared to the first quarter of this year, prices are running up faster during the second quarter than they were in the first. And really where we saw this start to take off is more at the end of the second quarter. June, July, August is when we saw prices on a month-over-month basis getting to levels that I think normally the Fed would be concerned about. The 3-month average for most of these price indices. In fact, if you look at core CPI, PCE, and core PCE, the 3-month average for all three, right there at 3.2%. Mm-hmm. And so I think that is the piece that has some folks hung up about cutting in this environment. But in any case, I think very clearly the Fed is on this path of lowering interest rates into this environment. I think they are today justified in doing so. But I think right now, I'm trying to contextualize this. Right now, more than I think any time in the last few years, the Fed is justifiably confused about what to do next. I think they were confused about what to do next back in 2022, but they shouldn't have been. It's kind of my conclusion. Like, it was a pretty obvious prescription. I know that sounds obvious in hindsight, but we were saying at the time, too, that, look, you just had Russia invade Ukraine. You had a massive amount of spending, shutdowns. We're going to have inflation. You need to be raising interest rates. Today, the waters are very muddy. It is really unclear what comes next. There are definitively concerns about the pace of hiring in the private sector. Even the public sector, the pace of hiring obviously is pretty low given the administration's goals to reduce headcount. And at the same time, there is still a tremendous amount of spending going on. GDP is getting revised upwards. There's a lot of infatuation with the stock market, with artificial intelligence, and all of those things are the possibility of being inflationary and running away to the upside here. And so I was listening to an interview with Stephen Myron with, I believe, Bloomberg just yesterday. He whipped out the word transitory once again, throwing it around on talking
thought that
about
was up in the rafters.
I thought that they had, put that word away and decided not to use it anymore.
The rafters is probably too nice of a place for it. Maybe just
6 feet under
in the garbage
can. But that word was pulled back out by the newest voting member of the Federal Reserve to describe what they are seeing in terms of price increases right now. And that's kind of the trillion-dollar question with all this is can they get away with modestly lowering interest rates or, in Myron's opinion, dramatically lowering interest rates? I don't think he's going to get it, but that's his goal. And not spark off a period of uncomfortable inflation. And to me, these numbers are trending towards 3%. If you get much higher than that, then you start having people get frustrated. I think people are already frustrated, but you start getting to 3.5-4% range. That is when the Fed is going to have to take a very serious look at their policy strategy.
It's been really challenging over the course of the last 6 months or so to really gauge what direction the economy is going. Just when you think you have a beat on sort of where the economic data is trending, it sort of reverses
Let's give
course.
some examples here.
Yeah, I think this week is a good example of it, really, where all of the statements in the week prior was jobs data had been revised down significantly. 911,000 jobs had been taken away from March of 24 through March of 2025. You had the jobless claims number that came out, I believe that was the first week of September, that was in the
elevated high 200s.
250 maybe range, or maybe mid 230s. And then you had a number this week that was much lesser than anticipated on those continuing unemployment claims, jobless claims that were being filed. And then you also had a GDP number that came in revised to 3.8% in Q2.
Which, by the way, that GDP revision was primarily due to all of us spending more money.
Exactly.
It wasn't some nuanced like imports versus exports thing. It was really easy to explain. Turned out when we actually measured it, all the consumers in the U.S. spent more money in Q2 than we previously thought.
Right. So you have a consumer spending continually with a lot of resiliency. That's been the story for the last 2 or 3 years. But the week before, I would have told you, there is some data pointing to the labor market weakening. Not to say that these, jobless claims are the end-all, be-all. They're noisy, but again, this week you had indications that the consumer's still spending. The jobless claims aren't as bad as anticipated, at least for this week. So you sort of pause for a moment, that paired with the Q2 GDP number, to say perhaps some of these trends aren't really materializing. And I continue to sit here and debate whether or not we've seen the full impact from tariffs. I had read earlier that Ken Griffin from Citadel had been on saying that we're only 50% of the way there in terms of the impact of tariffs on the economy. I don't think anyone really knows how far along the line we are. I would have told you in April that by this date we would have known the answer to that question, but we still don't have a clear, conclusive read on that yet on the inflationary side of things.
That is the reality here. I don't think that's bad news necessarily. There's oftentimes that kind of fog of the moment where it's really tough to tell exactly what the biggest looming issue could be. But right now, it just happens to be a tie between the two things that the Fed is really in charge of at the moment. And so I do think they're going to move cautiously. I don't think that the president is going to get the cuts that he wants. I don't think Stephen Myron, the president's appointee to the Fed, is going to get the cuts that he wants. I think if there's I always like to look at this from a perspective of what could really surprise everybody, and the answer would be no more rate cuts, or dramatically fewer than are being priced in. Because right now, you go take a look at markets, they are very clearly pricing in definitively 2 more cuts this year, and probably more starting next year. And so if you want one thing that could surprise investors, it's that. It's that data comes out that reverses the Fed's mind on where rates need to be, and they don't need to hike rates. They just pause.
It's got to be inflation. That's the only way you'd have that, is runaway inflation.
And runaway, again, we're not talking about 8% here, right? We're not talking about 2022.
Yep.
It doesn't need to get that bad for the Fed to have to pause what they're doing here. Let's take a quick break. When we come back, new tariff announcements this morning, overnight. When did these actually come out, Tucker? It was after I was asleep. I don't know when precisely it was, but new tariff announcements. We got to cover that next here on the Financial Exchange.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com. Every dollar you've saved in retirement accounts and life insurance tells a story of hard work, smart choices, and the future you envision for your family. One way to help that story end well is to make a beneficiary choice that does more. This month's free guide from Cushing & Dolan, IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection, explains how naming your estate as the beneficiary of your IRA or life insurance can add a layer of tax efficiency and nursing home protection, while still allowing your spouse access when it matters. It's about keeping more of what you've built working for your loved ones now and in the years to come. Get your free copy today by calling 866-848-5699. That's 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The latest news on inflation, the Fed, the economy, and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
So as I mentioned, this morning we learned of new tariffs being imposed on the pharmaceutical industry. I want to start there. There's also something about trucks, but starting on the pharmaceutical industry, because I think this has been in focus for a lot of families over the course of the last several years, realizing that, oh yeah, like a lot of my generics are being made in China or other parts of the world. And so I know for certainty that this story is going to get misinterpreted, and so I want to cover it specifically what it's going to do here. So starting October 1st, the United States will be imposing a 100% tariff on some pharmaceuticals, but we're talking about branded or patented pharmaceutical product unless a company is building their pharmaceutical manufacturing plant in the United States. So that was the post from President Trump on Truth Social. And so obviously your mind goes to, okay, what precisely does that mean? The answer is that there are very few drugs that are patented or what's the
other word? It was branded. Yeah.
That are manufactured outside the United States. 9 out of 10 of these drugs are done in the United States, and then also 9 out of 10 prescriptions in the U.S. are actually filled with generics, not branded drugs.
Right.
Those generics are the ones that are, heavily manufactured outside the United States and are
places.
not affected by this overall. From what I was seeing the other day, only about 5% of the branded drugs that the United States imports come from China, or come from Asia rather. The rest of them primarily coming from Europe, and many of those European companies are already in the process of developing U.S. manufacturing or have already done so. And so market reaction has been very muted on this. No, not many companies are getting hit with this. I think the logical question is, do they go after generics eventually, right? Is this a first step? And I think that's a fair question to ask. But I think the very first thing people are going to react to is, what's happening with the drugs that I take? And the answer is probably nothing, because you're probably on a generic.
Yep, that's a good way to look at it. The spillover effects, you can see that over the course of the last couple of days. It's interesting that this story dovetails with Eli Lilly announcing that they were going to build another manufacturing plant in Houston for $6.5 billion for weight loss drugs. And just you have a collective of pharma companies out there who have pooled together $350 billion to invest in U.S. manufacturing and research and development over the course of the next decade or so. So it's not as if a lot of the big pharma players aren't already at least committing from, verbal commitments to invest in manufacturing and research.
Sure.
So I think you take the story as a whole, you have companies that have been committed to do this in the first place, and you have minimal impact on the drugs that are out there. It's not as significant of a tariff story because it is not attached to generics at this point in time.
This is really, this is kind of the story of a lot of the tariffs that have been put into place thus far, which is make a big splash, but intentionally don't make it terribly impactful on American spending. That's been, when I look through the actual policies that have been put into place, there's a lot of give and take, but ultimately it's been, we announce something, we then announce the exceptions. And when you look at the broader policy, you can see why, oh yeah, okay, this is actually not going to drive prices all that much higher in the United States because of the exceptions on these key components or these key pieces to the overall policy. And so that's how I'm kind of looking at this one too, is, yeah, it's making a splash. It's maybe a shot across the bow of some pharmaceutical makers that, hey, we might be able to do this on generics too, so watch out. But for the time being, no big impact, other than probably a few very specific drugs that are going to be, more difficult for insurance companies and all that if it does get hit with this 100% tariff.
Yeah, it feels like the whip on a racehorse being cracked down. The whip gets cracked down of, hey, we're coming after pharmaceutical companies unless you invest in manufacturing in the United States. And then often it seems like companies sort of react over the few weeks by putting together some sort of deal or initiative to do just that.
Moving over, sorry, actually, we didn't cover the big
trucks.
Big trucks. So I don't know how big they have to be, but that is the other piece that they're going to be looking at. Commercial truck manufacturers, where they are making those outside the United States. Once again, getting a look at tariffs here. So Germany's Daimler, North America Unit assembles some Freightliner brands in Mexico. Those would be looking at some tariff. And so, honestly, the auto industry is such a mess with tariffs that I have no idea what happens next on this. This has been the constant bane of Ford, General Motors, and many others, and I know that they are working as quickly as they can to push the administration to create exceptions for their vehicles and moving manufacturing and changing things. At the same time, I would think that in the event the United States can get a attractive deal with Canada and Mexico, that this is the first thing that gets put away. In terms of like negotiable tariffs, I would think that having vehicles made under the North American, what is the new NAFTA? It's not new. It's like 10 years old now. But the North American trade agreement that we have with these allies, I would think that anything that we're going to announce here, whether it's on heavy trucks or cars, is something that ultimately the administration is going to negotiate on because it is so impactful for big American manufacturers.
USMCA?
Yes. Thank you, Tucker.
You're
USMCA. That seems very likely to me because as it stands now, many of these domestic auto manufacturers are at a legitimate disadvantage to Korean manufacturers, to European manufacturers, right? Like those countries have navigated and negotiated deals for their cars to come into the United States, even if they are not manufactured in the U.S., whereas American manufacturers of vehicles, if they're doing it in Mexico, are getting hit with way bigger tariffs. And so I think there's still a lot to be worked out on this. I am concerned about the auto market generally, and this is, again, a bit of a stumbling block for many of those companies, but I don't think is a showstopper for any of them.
Also worth noting, the last thing on the tariff front, there also were some tariffs announced on kitchen cabinets, bathroom vanities, and other similar products. A 50% tariff and a 30% tariff will be imposed on upholstered furniture. So you have the likes of RH and others down slightly on that news today.
So taking in all this context, Paul, this is what I have to wonder about, right? We just had that GDP revision yesterday that was primarily on the back of the U.S. consumer. And at the same time, we've had all this bad data about the labor market and everything else. Polling on people's views of the economy is pretty abysmal. All of this stuff is remaining true. And so if I'm looking at Q2 data, April through June data on consumer spending, is it just still a whole bunch of front-running tariffs? You know, like you think about that logically. We didn't see yet the big price arrangements. We still had very big uncertainty on where tariffs were going to be. I certainly heard from people who were saying, heck, I actually did it myself, right? I've talked about it, how I was buying a bunch of stone for a project that we were doing, and I rushed that shipment to get it to me well ahead of time in case it stopped getting imported. And so I just kind of wonder, hey, is that what we were seeing in the second quarter, and is that about to dry up and shrink? Since, frankly, at this stage, I think that tariffs have been normalized to a large degree, and consumers are not thinking about them every day in the way that they were in the second quarter.
Am I remembering right that recent GDP report, that revision, did show that quarter saw a big uptick in sort of those durable goods? Yeah. As a result, like those categories of washing machines or, stones, items like that have a longer lifespan.
Again, anybody that's trying to put together a narrative on this is just guessing at this stage. We won't know until we see consumer spending for the next few months, but that kind of fits in with how I perceive things, when I talk to people about tariffs, how they perceive things as well. Quick break. We're going to cover Wall Street next with Wall Street Watch with Tucker.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home,
and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies, and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to deal with qualified retirement plan assets, and can they be transferred to these irrevocable Medicaid trusts?
So this is a tough asset in general. When you're dealing with retirement plan assets, it's difficult from an estate planning standpoint or a Medicaid planning standpoint to deal with them. Why? Because they have both an income tax component and an estate tax component, right? They're taxable when you take them out, and when you die, they're subject to your estate tax. So the general way to do this would be, one, you can name the spouse as the beneficiary of the IRA, or you can name the kids the beneficiary of the IRA, or sometimes you can name the trust the beneficiary or the estate the beneficiary. But it all depends on the size of your estate, the size of the IRA. But the one thing you really can't do is you can't take the asset and transfer it to the irrevocable trust or revocable trust while you're living. Otherwise, it will create a income taxable event. So tough to plan for those in advance unless you name the estate the beneficiary.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide called Why Name Your Estate an IRA Beneficiary right now by calling 866-848-5699. That's 848-5699, or you can request a copy from their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after its recent pullback, markets today are in mixed territory after the core PCE index showed it climbed 0.2% last month in line with expectations. Right now, the Dow is up by 0.3% or 143 points. S&P 500 edging 4 points higher. NASDAQ is retreating about 1/3% or 72 points lower. Russell 2000 is up 0.5%. 10-year Treasury yield, cannot find that. Not sure what's going on there with CNBC. Crude oil is up over 1.5%, trading just above $66 a barrel. Furniture and home goods stocks, including Williams-Sonoma, Wayfair, and RH, are seeing modest losses on the day after President Trump announced tariffs on imported items such as kitchen cabinets and upholstered furniture. President Trump also announced that he will impose a 25% tariff on imported heavy trucks, sending shares in Peterbilt and Kenworth owner PACCAR up over 4%. Pharmaceutical stocks are also garnering attention after Trump announced a 100% tariff on branded, patented, imported drugs, exempting companies building plants in the U.S. Eli Lilly, AbbVie, and Merck are all edging higher, while Novo Nordisk shares are down nearly 2%. Meanwhile, Intel stock climbing another 2%, now on pace for a fourth straight day of gains, following a report from the Wall Street Journal that CEO Lip-Bu Tan has approached Apple, Taiwan Semiconductor, and other companies about investments or partnerships. And Costco shares falling nearly 3% at the moment after the warehouse retailer posted higher sales and profit in the previous quarter. However, same-store sales growth missed street expectations. Costco also noted that newly extended store hours were paying off. I'm Tucker Silva, and that is Wall Street Watch.
So, Tucker, you remember the story yesterday that we covered with Intel approaching Apple. You just mentioned it, but Intel approaching Apple about a potential investment there. And my comment at the time Chuck was doing the show was, Intel only does this if they are getting the nod from one of their new shareholders, which is the United States government. It's the White House, right?
10% stake.
They have a big stake in it. NVIDIA now has a stake in it. And my answer now as to why they're doing this is this announcement here, where the Trump administration is now taking aim at chip makers with a new plan to throttle imports. Here is the plan. Trump administration is considering a plan that would force U.S. companies to maintain a 1-to-1 ratio of chips imported from overseas to chips made in the United States. So timeline, we don't know how long they have to do this, how big the tariff would be for those that don't comply. All of these are questions, but all of a sudden, the context of the NVIDIA investment in Intel, the Apple investment in Intel,
or the rumored
Apple investment, but they have clearly approached Apple about this. All of a sudden, all those things make sense. Right. I don't know that any of them will happen. I don't know if this policy will happen, but nonetheless, it is a clear, I don't know. To me, this is a clear one-for-one line of, okay, Intel was basically given this information, or somebody was given the information that something like this is in the works, and so go make some more deals because companies are going to be willing to pay for it. I think that's my kind of conclusion on the connection here.
Domestic manufacturing of semiconductors is an important issue for national security, and we can all agree that it is something that really has bipartisan approval in terms of both sides of the aisle. That's what the CHIPS Act was all about. However, this way of going about it, I disagree with. I think that the idea of subsidy and encouragement for manufacturing through grants and loans and other avenues is better than this idea of tariffing or doing this one-for-one exchange of semiconductors.
This way of doing it would be extremely complicated.
Yeah.
Also, to use this technique at the same time that, well, I don't know, but if they're using the same emergency act that the Supreme Court is currently weighing, then it has risk there.
That's another piece of this.
So I think there are some fair questions there, but I'm not necessarily opposed to a carrot and a stick. I'm not sure that this is the right stick, but nonetheless, this, like you said, I think it's important that we focus on getting more domestic chip manufacturing. But I think most national security experts would also tell you that probably the most important thing is staying ahead on AI chip innovation.
Exactly.
And if that prohibits you from doing it in the United States, then oh well.
That's where my criticism wouldn't lie, is that you still need to be on the cutting edge. And let's understand the reality of the situation, that these supply chains are incredibly complex and intricate, and it is a extremely difficult process, the manufacturing side. It's going to take a long time for the U.S. to catch up. So you need to allow for that process to occur rather than taking out the stick just yet, because it's going to take some time.
And by the way, I mean, the reason that Intel has been taking these investments, that Intel no longer manufactures chips for Apple, by the way, is because they haven't been competitive.
They've been a disaster. They've been an absolute disaster.
Like, that's the reality here, is if you're trying to be competitive with the overall idea that we are going to manufacture here and do a good job, Intel has proven for a good decade now that they're incapable of doing so.
Missed mobile and missing the GPUs that NVIDIA is behind right now. So, yeah, they've been behind.
Story that I hesitate to bring up because we've almost been asking this question seemingly every day, but the Wall Street Journal has another piece here today on spending in AI and what the path really looks like. And this is the whole game, right? When you talk about markets being at all-time highs, when you talk about valuations where they are, when you talk about the continued acceleration of the U.S. economy, all of it is on the back of artificial intelligence promises.
Right.
And so, accurately, I think many people, from journalists to economists to market analysts, are asking the question, great, we see the impact. We see the investment. We see that they do a really good piece on this new AI factory in North Dakota. Tiny town, 1,100 people population, 2 motels, Dollar General, a small college, and a now $15 billion AI factory that's going to be bigger than 10 Home Depots.
Think about that. 10 Home Depots big. Just think about that. You get exhausted walking around one Home Depot, let alone 10.
But these data centers are really fueling the economic growth in this country right now. These things are being built domestically. They are needing massive energy requirements, and so the electricity generation facilities are being beefed up and built new in order to facilitate all of this. But the question keeps getting asked, and nobody's got a great answer yet, which is no one really knows how and when these investments will be paid back.
I thought this was a fantastic piece. I know you guys have probably covered it exhaustively this week with just NVIDIA and OpenAI and some of the deals that have been done, just the focus on the investment in infrastructure and the hundreds of billions of dollars that are being spent. What I liked in particular about this is that in order to justify the amount of spending that Mike and I are speaking about here, the 300 or 400 billion of CapEx that's going into building these data centers, you have different consultants and economists out there estimating that, for example, the revenue generated by AI would have to reach $2 trillion, according to Bain, in annual revenue by 2030 to justify this wave of infrastructure spending. And right now, if you look at the revenues of Amazon, Alphabet, Microsoft, Meta, and NVIDIA, that $2 trillion number isn't even all 4 of those or all 6 of those companies combined, and it's 5 times the size of the global subscription software market. And so as much as all of us have used probably ChatGPT or other sorts of AI chatbot prompts, how do we get enough revenue to substantiate that capital expenditures? And the comparisons to the fiber optics cables back in the late 90s are great studies of what seems like eerily similar sort of times.
This it's the field of dreams promise. If you build it, he will come.
Yeah.
And to be fair, like, kind of happened with the internet.
It did. It just took longer to take hold, and you had a lot of companies that invested heavily
that weren't the ones that actually profited.
Exactly. Think of Global Crossings, WorldCom, 360 Networks, companies that you don't talk about now, but it's really Google and Facebook and others that benefited from the fiber optic build out in the mid-2000s that occurred in the mid-90s.
It's a multi-trillion-dollar question. Will it be Google, Facebook, NVIDIA, and OpenAI that profit on the infrastructure that they are all investing heavily in? Or will it be some
small
startup?
no-names that just leverage all the hundreds of billions of dollars that these other big hyperscalers spend to build out this infrastructure?
Yeah.
And just do it in a smarter way.
I mean, the critical piece here, and the piece that I'm a little bit concerned about is you're not hearing about a lot of those startups like you were in the internet stage. You're not hearing about some brand new upstart who has manufactured a really compelling AI product. You're instead seeing AI, Google focusing on their AI product. You're seeing Apple focusing on it. And I haven't really come across a whole lot of brand new unknown companies that put something in front of me, the user, and say, look at this. This is compelling. This is something you should pay for. And I think that's what everybody's waiting for and looking for. And also questioning who's going to make it.
ChatGPT would be the biggest argument with 700 million users, but I get what you're saying, that there are, to be clear, there are hundreds of startups out there doing this stuff, but it probably hasn't made the way to our faces just yet in front of us.
Let's take a quick break here. When we come back, we can move on from the AI virtuous circle. Let's go over to Americans and their financial plans. This is an interesting one for me. Quick break. We'll be back with that next on the Financial Exchange.
The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
Mark Varner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort, Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
Almost half of Americans, 47%, don't have a written financial plan, according to a recent study from the Allianz Center for the Future of Retirement. And my next question is, Allianz, who on earth did you speak to? Because there's no way that 53% of Americans have a written financial plan.
No chance.
There's no chance.
No.
What are you talking about? There's no way that 53% of Americans have a written financial plan. If you're listening right now, like, who that you know, if you polled 10 of your friends, do you honestly think half of them would have a written financial plan? I know with certainty that people in my age demographic would not.
Oh, definitely.
I'm not saying they shouldn't.
Yeah.
But they don't.
No chance. No chance.
So I don't know who Allianz talked to here. I don't buy the data. I think it is way off. I would be willing to bet that 75 to 80% of Americans do not have a written financial plan. Probably more. Because most people, until they have a really difficult decision, wing it. And frankly, a lot of the time that works out all right, but there are scenarios where it doesn't. The piece from CNBC then goes into like how to potentially address that, how to figure out how to find a financial advisor, what you should be looking for. I guess my point would be, any professional that you work with is going to cost you money. Obviously, not a lot of financial planners do this for free, nor should they. But before you go just hunting for one, because I think that's oftentimes what happens is like, oh, I'm 62 years old, time now to find me a financial advisor. Really ask yourself what it is you're trying to accomplish. Right? Like, because if you go in blindly, then those are the circumstances where I see people getting oversold and a little bit starstruck by all the fancy verbiage and everything else, and they end up just making bad decisions. Like, if I'm going to meet with a financial advisor, what am I trying to accomplish? What am I trying to answer? What questions do I have that I don't know the answer to? And then from there, you can try to hone it down, right? Like, okay, I have a ton of questions about how to fund my kids' college. You probably shouldn't be talking to your uncle's financial advisor that manages money for everybody only worth $20 million plus. He might be the best investor out there, but he's not going to have a lot of great advice in all likelihood to how to do a FAFSA app. Likewise, if your goal is to build a plan around how to successfully retire, and you're talking to a financial advisor that primarily helps out on managing debt repayment, again, might not be the best match there. And so that, I think, is the most important piece is, why do I need a financial advisor? What questions do I have? And then just admit, like, what things do I not know? Like, I have no idea how much insurance I should have. Okay, great. Yeah, certain financial advisors can help you with that, but not all of them. And it's important to kind of check the background and ask them those questions. Like, what do you specialize in? I know you help my uncle or my parents, but do you actually have any expertise in the things that I have questions on?
Right, and for some people, it's outsourcing the capability to a professional because maybe you just don't want to spend the time to do it yourself, similar to things around the house or other services that you find yourself just not having the time for or not having the interest in it because you don't have the requisite background for it. So that can be a driving factor. But you have to assess if it's right for you because not everybody needs one, but there are some people who really benefit.
Folks, markets near all-time or at all-time highs, near all-time highs from a valuation perspective. Economy at a seeming turning point, and I know folks have questions about it. That's why people tune into our show. If you tune in and you'd like to catch our live broadcast of the Financial Exchange, please join us on one of two dates, October 9th and October 16th. The 9th will be at the Margaritaville Resort on Cape Cod. The 16th at the Showcase Superlux in Chestnut Hill. The folks from the Financial Exchange and Armstrong will be doing a live broadcast. You can sit in. We'll talk to you in between breaks, and you know, I can do a show of hands for things like this when I just ask the general public. We'll also be doing a free lunch and a chat with the folks from Armstrong Advisory Group about our true perspective on where this market is right now and where it may be headed, and then most importantly, what it all means for you, the listener out there. You can register at armstrongadvisory.com. You do need to reserve your spot. It is a completely free event, October 9th or October 16th. First one down Cape Cod, second one over in Chestnut Hill. The number, if you have questions or you want to register over the phone, is 800-393-4001. I'll give that number out again in a minute, but again, October 9th, October 16th, Cape Cod at the Margaritaville, Chestnut Hill at the Showcase Superlux, armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As we head up to the top of the hour, markets are seemingly losing some of their steam here. The Dow, which was up more than 0.5%, is up only 0.25%. S&P 500 up a little bit less than 0.1%. The NASDAQ currently down 30 points, or about 0.14%. The Russell 2000 is still in the positive for the day. The 10-year Treasury yield, which I was also having a tough time pulling up, Tucker, is about flat for the day, slightly down to 0.006% as we close in on the top of the hour. We got a lot more to cover in the second hour of the show, folks. Stay tuned. We'll be right back.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston. The Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month on the topic of inflation and your retirement plan. Mike, a lot of people listening might be familiar with the idea of the Consumer Price Index, the CPI, but rare is it that we find someone whose own personal rate of inflation exactly matches the CPI consistently.
Of course, we all have different spending habits. We all live in different parts of the country and have different effects of inflation. But I think a great example here, Chuck, is during a large portion of the 2010s decade, CPI was relatively in control, and people got very little in the way of increases on their Social Security. However, healthcare inflation was pretty hot, and Medicare prices went up pretty dramatically during that period of time. And that is one area that dramatically affects retirees that doesn't play into CPI all that much and resulted in people seeing their Social Securities just not growing a whole lot during that 2010 decade. And so you really do have to evaluate the risk of, hey, here are my spending categories, and how might things like changes to the labor market or changes to energy markets, if I live here in the Northeast and I can't get natural gas and I'm instead relying on oil prices, how could those changes really affect my future finances?
Folks, our guide this month is titled Inflation in Your Retirement Plan, and the way to request it is by calling 800-393-4001. You can also request it online at armstrongadvisory.com. The guide again is Inflation in Your Retirement Plan, and that phone number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Paul Lane.
Morning, happy Friday, and welcome back to the Financial Exchange. We've got an exciting next hour for you. The chief economist of Compass Real Estate, Mike Simonsen, is going to be joining us in the next segment, and then Paul LaMonica from Barron is going to be joining us later on in the program. This morning at 8:30 a.m., we got a release from the Bureau of Economic Analysis? Yes, BEA, on the state of inflation, and did not surprise. This is our second reading on inflation. CPI usually comes always comes earlier in the month, and this reading showed a similar story, which is inflation, while it has been heating up a bit in the last 3 months, remains in a, I would say, relatively uncomfortable level, but not worrisome enough to drive the Fed to change their path, which is towards cutting interest rates. The reading on inflation that you did get this morning, the headline inflation number up 2.7% year over year. When you strip out food and energy, up 2.9%. And those same figures up 0.3 and 0.2 for the month. And that's about where they've been since June. We've seen these upticks since June, whereas the months beforehand were pretty muted on the inflation front of things. We have a new tariff announcement from the White House when it comes to branded pharmaceuticals that are manufactured outside the United States. This headline, I think, is going to be probably misinterpreted by a lot of folks, so important to keep in mind that this is just branded pharmaceuticals. It does not apply to generics, but some of those branded pharmaceuticals are going to be looking at 100% tariff rate if the parent companies are not investing in manufacturing inside the United States, and I think might be a shot across the bow in terms of what could be to come for generics, but probably not a whole lot of willingness to do that at this point. Near Kasser from Bloomberg writes, millions of Americans becoming economically invisible. Paul, this is a story that we have highlighted many times in kind of a different light over the course of the last few months and years, which is increasingly, the spending in this nation is coming from the top 10% of income earners. And I'm certain that when you look at the top half, it's got to account for a whole lot of the spending. But half of the total spending in this country is coming from the top 10% of income earners. And so when we hear stories about this, I think this fits right into that same narrative, which is quite literally, when you look at broad statistics about the economy, when you look at consumer spending, when you look at inflation, when you look at wages, there is a wide swath of the American public, probably that bottom third or so, that really do not move the needle at this point for the state of the overall economy. And likewise probably helps explain why the data on the numbers, who's spending what where, does not seemingly match up with the data on sentiment that we get on a regular basis.
The bottom 60% of wage earners account for less than a fifth of consumption in this country. That's down from more than 26% 3 decades ago. So we were at 26% for the bottom 60% of wage earners 3 decades ago. That number is now lower than 20% today. So you have 60% numerically of the workforce, 80 million plus workers that are contributing less than 20% of overall consumer spend. It's this weird phenomenon where numerically there are more people statistically numbers-wise that are in a rougher economic place, but you're in this uncomfortable economist spot where you say it doesn't really matter as much for the dollars and cents that are being spent around this country.
I hesitate to say it doesn't matter because I said that too, and you just said it, and it's an accurate description. Here's what it doesn't matter for. It does not matter for the corporate profits of major U.S. companies.
Right.
And those major U.S. companies drive things like the stock market. They drive major spending in the AI trade. And so when we say it doesn't matter, I think that can sound a little bit cold. And I don't think we're intending for it to be cold. It is just the literal reality of what moves the needle for this big picture of the economy, for inflation, for GDP, for major companies. And the answer is decreasingly 60% of Americans are what moves the needle.
Right.
And that's a pretty terrifying number. And it's on top of, I think, a theme that I keep hearing from folks, which is, what does the job market look like 10 years from now with AI? Are my skills going to be valued in the same way? Because unlike, well, I guess similar to other technologies in the past, but this technology especially is designed with one real thing in mind, which is to emulate human beings. And look, there's other automation systems that have done the same in the past. Every technology in some way is made to make people more efficient, but this one does seem a little bit different on that front. I think people are rightly afraid of it for that circumstance. And what a lot of the writing has been around is, how are we going to ensure that this technology does not make the wealth and income situation that we're dealing with
more
in the United States now even worse down the road?
Sure.
And so we're seeing that there. And I think it is a little bit tough to evaluate. We've got to take a quick break. When we come back, Mike Simonsen, chief economist at Compass, joining us next on the show to talk a bit about the state of the housing market, what he's expecting for the end of the year here, and then obviously all eyes will be on that spring market as well. Mike's with us next.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Joining us now is the chief economist at Compass Real Estate, Mike Simonsen. Mike, thanks as always for joining us, and congratulations are in order. I don't think we've spoken since the new role, so congratulations on the new role at from my perspective, one of the fastest growing real estate firms out there.
Thank you very much. It's always great to be here.
So in your new role as chief economist there, I'm sure you spend a lot of time addressing the staff of realtors at Compass. And what are you telling them here as we head into what I would assume is usually a pretty slow period of time for real estate transactions? The closer we get to Thanksgiving, I've got to imagine that's when things really dry up. But what are you seeing out there, and what are you telling the realtors at Compass?
Yeah, my job is really to help everyone understand the U.S. housing market, and that's buyers and sellers as well as the professionals in the organization. So it's the fall. It's in September. We actually have a little bit of a last gasp of the housing market. Mm-hmm. In the U.S. there's really 2 markets happening right now. There's a Midwest and Northeast, and then there's the Sun Belt. There are 2 different things going on. And so in the Midwest and Northeast, inventory is still actually very tight, There's not a lot of people selling homes, moving, like the over the years, we've been moving north to south. And as it got expensive to move, we're moving a lot less right now. And that's not just mortgage rates, it's also insurance and all the other things. So we're moving a lot less commonly right now. It's also the job market because companies aren't hiring very quickly. We're not quitting our job in Boston to find one in Orlando. And so we're not selling our house in Boston to buy in Orlando. Inventory is at very high levels in Orlando and still very tight in the Northeast. So that's a really notable split in the U.S. right now.
I hate to get overly specific here, but I have been just amazed by what's been going on in Connecticut. It has been reliably the worst inventory situation in the country. I know this applies to most of the Northeast, but do you know if there's something unique about Connecticut and its proximity to New York, perhaps, that's making it such a difficult market to buy a home right now?
You're right that Connecticut has been just barely maybe 1 or 2% more homes unsold on the market than a year ago. For much of the year, it was fewer homes. And so, I think that it is in this phenomenon, it's more commonly the suburban areas than the urban areas. So, for example, I was in Chicago this week, and the same thing's happening in Chicago. There's inventory in downtown condos in Chicago, but in suburban Chicago, it's very tight. And it's like those are the folks who were, selling and moving south. And those are the folks who are holding on still. And there may be, the city of New York has actually had, tight, like a reasonable demand for homes. So and growth in the economy. So that could spill over into Connecticut and be part of the factor that there's less supply and demand isn't as light as it is in much of the country.
Mike, I'm aware of this story that you've told of two housing markets in this nation, the Sun Belt versus Midwest and Northeast, and just how different those markets look. And the question that comes to mind for me is why. And I've been, putting together some answers. It's a reversal of COVID trends. That's where a lot of the homes were built over the last several years. Insurance costs go up. Is there but honestly, none of those to me explain all of it. Is there a really concise story as to why the Sun Belt is seeing such an uptick in inventory right now? And is there something that reverses that trend or at least equalizes that market? Because it does not seem as though that increased volume is leading to way more transactions and way more price cuts.
Yeah, so it is, in fact, all those things. I called it the Great Stay. We are staying in our towns, we're staying in our homes longer, we're staying in our jobs longer. So, because companies aren't hiring very quickly, we're not quitting our jobs. We're not, and so all of these things were it's related to COVID and I have a great mortgage from the pandemic and, the companies have the right staff size from the pandemic. So all of those things, and they don't need to hire more. So all of those things are conspiring to keep us in place longer. And so you're right, in the places where we've been building a lot of houses because we've been moving very quickly there. Now when we slow down that move, that inventory builds up. In a place like Western Florida, like Tampa, we have outbound migration. So Tampa is actually shrinking. We have also things like dramatically higher insurance costs.
Yes.
So, if you had a house in Tampa that you used for a couple of weeks a year, it used to be very cheap to hold that. Now it's suddenly got more expensive to hold that. So even if we're not moving, those also come back on the market. So you have all of these factors that are going together right now. My guess is, when does this change? When does it end? And when we get into a business cycle where companies are hiring again and we are more confident about our ability to quit our jobs, those kinds of elements in the business cycle, when those kick in again, then we can move. Then we will say, you know what? Okay, I put off my move to Florida or to Arizona for 3 years now. Now it's time to move. So we're in a restricted time now, and at some point, those the governors get lifted and allow us to start moving again.
So, Mike, I won't try and nail you down on where you think interest rates are going, because I don't know about you. I find that to be a loser's game of trying to predict where that's going to be. But can you instead try and give me a sense of where you think interest rates might need to be for people to stop feeling so locked into their current situation?
Yeah, there have been, in the last 3 years, there have been two moments when interest rates, the 30-year mortgage rate got close to 6%. And in both of those times, so it was the beginning of 23 and it was September of last year. And both of those moments turned into an uptick in buyer demand, more transactions, and actually pushed home prices higher surprisingly quickly. Surprisingly to me, I was surprised by the reaction of both of those times. So I look at 6% as a sort of threshold where we start to move the needle. We start to see, oh, there's more transactions happening. There's, people are feeling like a move is affordable. So there's been only two moments in the last 3 years when that happened. The 6.5% is not enough, and so when rates are roughly around 6, that means some people are getting rates in the 5s, and those people are starting to feel affordable. So that's really a level I am interested in. What's interesting right now is that the jobs market is arguably deteriorating.
Yep.
The unemployment rate is ticking up. The hiring rates are low, very low. The job creation rates are very low. And so does that mean in 2026, if the jobs market is worse, the economy is slower, does that mean that number needs to be even lower before we move the needle? Maybe that threshold moves lower in the coming year. But as of right now, the two times that we've gotten close to 6%, we could see the needle move on housing demand.
Yeah, that all else equal statement is all
That's
important right now. Mike Simonsen, Chief Economist at Compass, joining us today to talk about the state of the national housing market. I really appreciate you coming on, Mike, and we'll talk to you again soon.
You bet. We'll talk soon.
All right, time for trivia here on the Financial Exchange, and it's the final day of TV sitcom trivia here that we've been doing the entire week. So here we go. Everybody Loves Raymond ran from 96 to 2005 on CBS. The show was nominated for 69 Emmy Awards and won 15. Most of the cast members won an Emmy Award for their performances on the show. Of the main 5 actors on the show, only one failed to win an Emmy Award. So our trivia question today, who is the only actor on Everybody Loves Raymond to not win an Emmy Award during their time on the show? Once again, who is the only actor on Everybody Loves Raymond to not win an Emmy Award during their time on the show? Be the third person today to text us at 617-362-1385 with the correct answer. You win a Financial Exchange Show t-shirt. Once again, the third correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
I'm going to give this one to Tucker. Tucker, you want us to talk about Costco or Zillow next? Zillow. All right. Zillow just hit their first profitable year in the last 13. The last time they did this was 2012, and they have gone through a few rough tracks here. They tried buying houses unsuccessfully. They tried a few different things that didn't work well, but they seem to be getting the point that, hey, we are one of the most popular, forget about real estate websites. Like, we are one of the most popular websites out there that Americans like to browse.
Sure.
And let's maximize the utility of that and finally finding a way to make a profit here.
Well, it's funny. The context of the article in the Wall Street Journal here, largely a lot of the improvements on the profitability have been from cutting expenses. It's like, like suddenly we realized that if we cut overhead and trim down some of the stock-based compensation that we would generate a profit. Who knew by cutting our expenses that we would go to profitability? They all are also diversifying their services a little bit, trying to make money from mortgage origination, rental listings, and software for real estate professionals. So those have been helpful.
Here's what I think. They need to go further. Like, this company has so many eyeballs on their listings every single day. They need to be advertising to us. Like, hey, you really like the look of that house. I keep seeing you look at it, because that's how people are using this site now. It's not to actually buy real estate. It's just as a hobby. You like the look of that kitchen? Here's the same one from IKEA. Advertise that type of thing. I think that they have so many eyeballs. It's becoming more of a social media platform than it is a true real estate platform. And I think they underappreciate how much more they could advertise. Quick break. We'll have the trivia winner and then talk some Costco next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest risks to retirement isn't just market volatility, it's longevity. People are living 25 to 30 years after they stop working, and that gives inflation plenty of time to work against you. At just 3% inflation, your expenses double in about 23 years. Add to that the fact that healthcare costs typically rise faster than general inflation, and your later years could be your most expensive. Without a plan, that combination can put real pressure on your savings. That's why we've put together a brand new guide called Inflation in Your Retirement Plan. The guide shows you ways to balance longevity risk with rising costs and strategies that may help you make your money last through decades of retirement. Call 800-393-4001 to get your free copy today. 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte-Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Mark became familiar with after his military service ended back in 1984. As Mark built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Mark works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Mark Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about choosing beneficiaries for your IRA. Todd, what is the best way to set up designated beneficiaries for qualified plan assets from both a Medicaid and estate tax planning perspective for a married couple?
Generally, for a married couple, you have several choices. The most commonly used one is you're going to make the surviving spouse the designated beneficiary. It doesn't shelter assets from estate taxes. It just passes to the surviving spouse. It avoids probate, and it's probably the best way to go from an income tax perspective, not necessarily an estate tax perspective. Another way would be you could technically name the trust the beneficiary of the IRA when you pass. That at least will help it shelter assets for estate tax purposes and still provide for the surviving spouse. But from a Medicaid perspective, it will then protect it from the nursing home, but it'll take 5 years. Perhaps the newest and best way to do this would be to name the estate the beneficiary, provided you are over age 73 or over. That way, it goes through probate into the will. It is sheltered for estate taxes. It is immediately protected from the cost of long-term care for the surviving spouse, and the surviving spouse has access to it as well.
Educate yourself about the estate planning process. Request your free copy of Todd's brand new guide, Why Name Your Estate an IRA Beneficiary, right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in mixed territory after yesterday's pullback, where investors are reacting to the core PCE index posted earlier this morning, which climbed 0.2% last month, in line with estimates. Right now, the Dow is up by about 0.5% or 236 points. S&P 500 is up nearly 0.3% or 18 points. NASDAQ dipping by 7 points at the moment. Russell 2000 is up 0.2%. 10-year Treasury yield currently at 4.183%. And crude oil is up over 2% higher today, trading at $66.33 a barrel. Furniture and home goods stocks are seeing attention today after President Trump announced tariffs on imported items such as kitchen cabinets and upholstered furniture. Williams-Sonoma down by nearly 1%, while RH is falling over 3%. Wayfair, on the other hand, is actually up almost 1%. President Trump also announced that he will impose a 25% tariff on imported heavy trucks, sending shares in Peterbilt and Kenworth owner PACCAR up by over 5%. Pharmaceutical stocks are also in the spotlight after Trump announced a 100% tariff on branded, patented, imported drugs, exempting companies building plants in the U.S. Eli Lilly and Merck are all edging higher, while Novo Nordisk is down over 1%. Meanwhile, Intel stock climbing another 3% at the moment, now on pace for a fourth straight day of gains following a report from the Wall Street Journal that CEO Lip-Bu Tan has approached Apple, Taiwan Semiconductor, and other companies about investments or partnerships. And Costco shares falling nearly 2% after the warehouse retailer posted higher sales and profit in the previous quarter. However, same-store sales growth missed street expectations. The company also noted that newly extended store hours were paying off. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question: who was the only actor on Everybody Loves Raymond to not win an Emmy Award during their time on the show? For some reason, it was Peter Boyle, who played Frank Barone and was probably the best character on the show. Dottie from Saugus, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Dottie. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Costco stock actually moving down today after what was described as a pretty good earnings report. Stock hasn't really moved a whole lot over the course of the last year. They're up about 2.5% for the past 12 months. Today down a little bit over 2% in early trading. I don't know the details of what investors were looking for out of this earnings report. Their e-commerce sales did bump up by 13.5%. I just have to say, I'm amazingly impressed by this company's performance and kind of where they stand in the retail space right now. Again, stock price not reflecting any big changes on this front in the last 12 months, but last 5 years, this company's up 170%.
Yeah.
So I hadn't shopped really at Costco much at all until this year when we changed from BJ's because a new one opened in our area. I think there's something that sets them apart. Yes, they are a big box discount retailer where you can go get all your stuff, presumably at a slightly lower price point, although I don't know that that's really what draws people in now. Costco has done an amazing job at setting themselves apart with specific products that people will go to the store for.
Sure.
their tequila, for example. My uncle will only drink tequila, Costco, Kirkland brand tequila.
Mm-hmm.
And when COVID struck, the dude went out and bought like 15 bottles of tequila because he wasn't sure when he'd be able to go back to Costco. They have clothing that people will actually go to Costco just to buy this special brand of clothing that is apparently, maybe a knockoff of Lululemon, but neither here nor there.
Right.
They are becoming, in my mind, a bit of a TJX play.
How
like
so?
You're going to Costco sometimes because you've heard that this slightly rare product that they don't usually keep in stock might be at that TJX or at that Costco store. They're creating this kind of treasure hunt type vibe. I mean, heck, treasure hunt. They literally were selling gold bars over the last few years and selling out of them. I think that Costco really, from that perspective, occupies a different space than BJ's and Sam's Club do.
Oh, definitely. I mean, really, they spend no money on marketing at all. So all of their marketing is word of mouth from customers. So it points to what you're talking about there, is that specific customers have this loyalty to brands, whether it's the Kirkland brand or specific items from Costco. They talk about it, and probably the reason you got a membership is because you had probably heard of all these people who really enjoy the experience. The reason I got onto it is my wife and my father-in-law were huge proponents of it, and all of a sudden it got me into that world too, where I love about their business, it's so simple and straightforward. It's 13 to 14% margins on pretty much everything that they sell, so you're getting a fair price, and then also the quality of stuff that they present is really strong, and that's what keeps people coming back to generate the free cash flow from that membership fee that they derive their income from every year.
Do you have the membership that gets you in half hour early?
My father-in-law does.
Yeah.
We mooch off that a little bit.
Yeah, that's critical.
On the weekends, it's crazy.
Why?
Because if you go on a Saturday, it is an absolute zoo. If you're taking your young children, you have to worry about them getting mowed down by
Do not take young children to grocery shopping. That's like, come on, parenting 101.
No, we'll do it for kill time in the winter if it's slow. Yeah.
Hell on earth. My wife and I have this debate all the time. Like, I'm going shopping. I'm going to take the kids. Like, what a terrible idea. They're going to grab everything off the shelves. They're going to try and put it in the cart. They're going to ride in the cart and then climb on the cart. Terrible idea. Leave your kids.
You don't know how desperate winter gets. Send them to a play place in the winter? Good luck with that.
Yeah, I don't know. I don't have a good alternative. That's what Uncle Walt's there for.
Every dollar you saved in retirement accounts and life insurance tells a story of hard work, smart choices, and the future you envision for your family. One way to help that story end well is to make a beneficiary choice that does more. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies, and Nursing Home Protection. It explains how naming your estate as the beneficiary of your IRA or life insurance can add a layer of tax efficiency and nursing home protection while still allowing your spouse access when it matters. It's about keeping more of what you've built working for your loved ones now and in the years to come. Get your free copy today by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Starbucks, still working on that turnaround story and not seemingly getting there, and stock prices reflecting it as such. The year to date, this company has lost about 10% of their value. Over the last 5 years, they have gained nothing. Their stock's basically flat over 5 years. New CEOs in there trying to work a turnaround story, closing stores, trying to simplify things. But the more I thought about this, so the real problem that the CEO has identified, at least one of the big problems he's identified, is the crazy number of customizations you can make when you go to a Starbucks. And I was comparing this to, like, imagine you walk into even a fancy bar, Paul.
Mm-hmm.
You walk into a high-end bar where they're all about cocktails.
Yep.
You don't go up to the bartender and say, "Hey, I'd like you to mix the rum with the with this specific sweetener, and then add a little bit of that flavor in there for me, and make this specific cocktail that I just dreamed up for me."
You just pick what's on the list.
You either pick a very well-known cocktail like a Manhattan,
right,
that they're definitely going to know how to make, Or you go look at their list of, inventive,
Specialty
cool cocktails
causes,
and go with
right.
that. That's not the Starbucks model. The Starbucks model is you have it exactly the way that you want, and if we screw it up, we're going to remake it for you. And because of the number of ingredients that we carry, there's something like hundreds of thousands of different possible combinations, and we're going to do it all for less than a cocktail costs.
Right. And
right? Like even the largest one, if you make one of those, what was the, let's see, a venti white mocha quad shot, 2 shots on bottom,
like
2 on
made
top,
up, but
almond
yes.
milk, extra hot, caramel drizzle inside the cup, and extra whipped cream. Like, you think about that type of specification and customization should cost something outrageous over $10 and probably doesn't. And so I don't know how they get themselves out of this conundrum because they
Just
built
stop
their business.
accepting the orders. Be like, this is the menu.
I think they lose customers.
No, they don't.
I think they do. I
don't
think
know.
They do.
I think
if you have enough variety of like the sweet coffee drinks and with the regular coffee drinks, like if you have enough variety offered,
I think that's what they need to do.
People will do it.
I think they need to do it because that's how I would assume bartenders and bars make money is they pre-mix a whole bunch of stuff for the items that are on their menu. And so even if they're really complex, they can just make it happen pretty quickly. And Starbucks can't. And so I think that's the only choice they have is to simplify the menu further.
Yeah.
And I think they're terrified to do so.
Well, also the other piece of this is that they have to commit one way or another, and it sounds like they're committing back to the older way of previously Starbucks you went to for the experience, to sit down there and enjoy your latte and, utilize the Wi-Fi, and it was more experiential.
Bring your typewriter.
But now with the prevalence of the mobile online ordering system, it's become much more transactional. And so you sort of have to pick one way or another. Are you the neighborhood coffee shop, or are you trying to be like the Dunkin' of the world where it's really focused on just hammering out more mobile orders as fast as possible?
Did you guys see the new store concepts?
For Starbucks?
Yeah. No, for something else.
Well,
I
thought there was Luckin in here
no.
is making some waves.
I mean, the images are out there. They're definitely going back to the coffee shop vibe now.
Does it look nice?
Use their internet right there.
You've
Just look
seen
it up.
it.
You'll do it.
You do it. No, you do it. Let's take a quick break, and Paul LaMonica is joining us next.
He'll do it.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Are you wondering where the economy is headed? GDP is growing, but tariffs, inflation, and job numbers are making headlines. Interest rates, housing costs, and policy changes are impacting all of us. Even AI is changing how markets move. Hi, this is Chuck Zada from the Armstrong Advisory Group. We're hosting 2 financial seminars this fall to help you make sense of it all. Join us at Margaritaville Resort Cape Cod on October 9th or at the Showcase Superlux in Chestnut Hill on October 16th. To reserve your seat, call 800-393-4001. We'll break down the economic trends, market risks, and smart strategies you need to plan for retirement and beyond. Diversification, preparation, and smart decisions are several of the keys to navigating uncertainty. Register today by calling 800-393-4001 or on our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. This month's free guide from Cushing & Dolan is called IRA and Life Insurance Planning, Estate Tax Strategies and Nursing Home Protection. Learn how naming your estate a beneficiary can reduce estate taxes, protect assets from nursing home costs, and avoid the 5-year Medicaid waiting period. Call 866-848-5699 to get your free guide today, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This fall, why just watch the leaves change when you could watch the sunset over turquoise waters? The U.S. Virgin Islands are your perfect fall escape. Set sail on the sparkling blue sea, snorkel colorful reefs, kayak through calm lagoons, or try to reel in the big one with world-class sport fishing. Then, explore Charlotte Amalie, the capital of St. Thomas, with its historic streets and duty-free shopping. Ferry to St. John's Virgin Islands National Park for hiking and secluded beaches. And finally, experience the culture, festivals, and rum of St. Croix. 3 incredible islands, countless experiences, and something for everyone to enjoy. With easy travel from New England, no passport required for U.S. citizens, and no money to exchange, paradise is closer than you think. So why wait? This can be the season you fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. The U.S. Virgin Islands. Plan your getaway now at visitusvi.com. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit goredforwomen.org today to learn more.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
This year's DAV 5K is sold out, but you can still help our great American heroes. The race is Saturday, November 8th at Castle Island, and you can visit dav5k.boston to make a donation of any amount to support our troops. Your gifts help fund free rides to medical appointments for veterans and the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today.
We are now joined by Paul LaMonica from Barron's to talk a little bit about a specific stock that we'll get to in just a moment. But Paul, thanks so much for joining us.
Thanks a lot.
So Paul, we got O'Reilly Auto Parts on the docket today.
Glad you did it and not me.
We're going to be talking about O'Reilly, and in particular, this company has done quite well this year. It's up 30% year to date, and the company's sales forecasts are growing while its peers appear to be declining. What are some of the reasons behind just how well this company has performed and just the execution underlying O'Reilly's success year to date?
Yeah, it's a great question. I think, in particular, they've been, looks like taking market share probably from Advanced Auto Parts and Genuine Parts. AutoZone, which reported earnings earlier this week, is another very solid competitor. And I think a lot of people look at O'Reilly and AutoZone as the leaders in this industry. But O'Reilly in particular, I think, has done a great job of opening up a lot of these regional distribution centers across the country, and that enables them to get parts to stores and mechanics at lightning speed. One analyst that I quoted in the piece talked about how he was at a store doing a channel check, and employees there were telling him that they can get parts in as quickly as 20 minutes from one of their regional distribution hubs. So that's great for customers. If you're walking in and need a brake pad or, oil, or obviously oil's usually in the store, but if you need something that's not there, odds are you're going to get it pretty quickly. And with consumers now driving clunkers for longer instead of buying new cars, there's a lot of need for those, repairs every now and then. And I think a lot of people like to do it themselves for cost-effective reasons.
That's blown me away, is that the average age of a U.S. vehicle on U.S. roads is in over 12 years, I believe, right? And that has, I imagine, been a huge catalyst for the company in terms of its success. Is that something that the CEO and executives have noted, that the amount of used cars out there is helping their business?
Yeah, without question, either used cars or people just holding on to cars for longer. I mean, it does seem a little counterintuitive. You might think that, oh no, if GM and Ford are having slower sales, and if people are driving electric more, that would be a problem. But it doesn't seem to be the case. It's counterintuitive, but I think that the older the vehicle fleet is for cars and trucks across the country, that's probably better for O'Reilly, especially for those DIY customers that want to do the repairs themselves.
Are they seeing any impact from tariffs in terms of their products?
Yeah, I mean, tariffs have been a concern, but so far it seems like consumers are willing to pay the higher prices, or at least they're paying the higher prices. No one's obviously going in and saying, yay, I'm paying more money, but they aren't going to stop making the necessary purchases for maintenance and repairs. And I think O'Reilly and AutoZone have also done a decent job of keeping some of those costs down so that they don't have to pass all of the tariff-related expenses to consumers. So this seems to be a little bit more of a tariff-resistant consumer company than others. And it's why one analyst came up, we all talk about the Magnificent Seven and the former FANG stocks. An analyst at UBS said that O'Reilly is the O in the cow stocks of three fantastic retailers, Costco, which reported earnings last night, O'Reilly, and Walmart being the W.
We'll see if that takes hold. Paul LaMonica from Barron's. Paul, thanks so much for the time this week. Really appreciate it. Have a great weekend.
You too. Thanks, guys.
Paul, experts are saying that buy now, pay later vacations are a bad idea.
You don't say.
If you need an expert to tell you that booking a vacation that you can't afford and using buy now, pay later for an asset that immediately depreciates once you purchase it, I don't know who needs that advice. But we talk about car loans being irresponsible because those are a quickly depreciating asset. Using buy now, pay later to buy groceries or pizza from, what was the one that we covered a few years ago? Papa John's allows you to buy pizza with buy now, pay later. One, if you are one of these buy now, pay later firms and that company and that person doesn't pay you back, what exactly are you collecting on? Because the pizza's gone. And even if you could collect on it, even if they didn't need the whole thing, I don't think you're going to be able to resell it. Same goes for a vacation. And I just imagine somebody, now some of these companies, they do require you to make the payment in full before you depart on your vacation. So it's like, okay, I booked it in January, I'm leaving August, I have to have it fully paid.
Could have used this for college spring break.
Imagine for a moment that you can't make the payments and you still have to go on the vacation because it's not cancelable, and the entire time you're just stressing about the fact that you lost your job and have to go on this wonderful safari through Africa. And what a terrible way to have a vacation.
You can't pay enough to have a great vacation. It's worth it.
Got it.
Just kidding.
Markets are mixed. The NASDAQ is off a bit more than 0.1%. S&P and Dow are positive as we end the show today. We'll be back at it on Monday. Have a great weekend, everybody.